So a family office managing $300 million dollars just completed due diligence on a new investment. It took their team 4 weeks, reading documents, building models, writing memos. 4 weeks. Two founders, both 25 years old, believe that is a solvable problem, and they built the AI to prove it. So Nicolas Frendo is our guest today, and he's the CFO and co-founder of Acephalt, a Toronto-based company building AI automation for investment due diligence. Before Acephalt, he and his co-founder, Winston Su, built tools for early-stage founders preparing for investor meetings. What they saw from that side of the table is what led them to build for the other side. Nicholas, welcome to the Attainment Podcast. Good to have you.
To be here. Thanks so much, David.
Fantastic. All right, let's jump into it. First, I'm very curious to learn a bit more about your story. You have a very interesting profile. So, we mentioned that you used to help founders build tools that help them prepare for investor meetings. What did you see from that side that made you flip and start building for the investor side?
Saw a lot of chaos, a lot of worry, a lot of not good. That's why we kind of ended up where we are right now. Just listening to those founders' stories, it was like brutal. It seems so compared to the public market and the private market. We want to make the private market as accessible as the public market, right? But when comparing the two, it's data room chaos. It's back and forth multiple times. Sometimes this can go on for a year. We've had founders that come to us and we're like, we've been talking to this VC, blah, blah, blah. And we're like, oh, that's good. When did that kind of kick off? They're like, a year ago. Like, man, that's a year. How's your runway? How are you still going on? It just didn't make sense to us why it was taking VCs, family offices as well, so long to decide yes or no.
Interesting. And you help those founders build the narrative that goes into a data room. Some people pronounce it data room. Is it data room or data room?
It depends what time of the day, to be honest. Sometimes I pronounce it data, sometimes I pronounce it data, usually data though. But I saw a meme the other day where they spelled it both ways and they kind of said somebody pronounce it data, somebody pronounce it data. And I pronounce it data, I pronounce it data when I read it both times. And it's very strange, but I usually say data.
Yeah, me too. Right. So you help them build the narratives that go into the data room, and now you build tools that take away the narrative and look more for what's underneath.
Yeah.
Okay.
Go ahead. Sorry, finish.
I was going to ask, does that ever feel like you're helping investors catch some of the tricks that you once taught founders to run, ironically?
That's a very good question. I don't want to say it's helping them catch it. I want to say it's helping them make a yes or no decision faster. A lot of this data is so unstructured. It's so all over the place. Their Excels are over the place. Their year by years are over the place. They're not updated. Their business plan is, because these small businesses, they pivot a lot, right? So we're looking at small businesses. Maybe this is like a business plan from 6 months ago, which is totally different from a product they're using right now. So we're trying to help them keep up to date with business plans. And we're helping the VCs to ensure that these data rooms are well up to date. There's no red flags. There's no legal red flags. They're almost investment ready. They want to know within a day now instead of a month.
Gotcha. Okay. And you guys primarily work with family offices, yeah?
Yeah, exactly. So we work with leaner teams. We have one big VC, one CVC with us, but most of our customers are VCs that are smaller teams.
Gotcha. I've heard that the Canadian investor scene is very much dominated by family offices. Is that what you're seeing as well?
I didn't even know there was Canadian investors, to be honest. Working around the venture capital, all our customers are from America. I do like Canadian ventures. That was a joke. I do know there are Canadian venture capital, Radical Fund, Georgian, different ones like this, extra innings, but they're a little more conservative the way they invest compared to the ones we talk to in America. I find the culture around investing is, black and white when you look at America and Canada.
Interesting. Yeah. Yeah. I keep hearing that. So for these lean teams, investor teams that you're working with, the family officers or the smaller VCs doing due diligence, maybe 3 or 4 people, what does a week actually look like for the people working there?
So a financial associate would usually, so first there's usually an intro. This intro can happen between, whether it's on social media, it usually happens between somebody in the middle. They say, have you checked out this person? I can give you their contact information. So now there's kind of a trust building. Once that happens, now they go out and they either approach them, or either way, one of them approaches the other. After that, there's an introduction call. They do an introduction call. After the introduction call, they then usually, if they like it, they then usually go ahead, get a data room. After they have that, then usually have to go through all these files. It depends how big, very unstructured, very clunky, very all over the place. It's going to be, you're looking at market. How big is the market? We don't actually know the competitors. There could be new competitors on the market, could be lies in the data room as well, all different things like this. So it takes usually financial analysts, there might be some meetings in between, more wasted time going back and forth. I guarantee there's meetings in between going back and forth, negotiating things such as these, but more just to ensure that this data is reliable as actually what's happening. So what we're trying to do is we go in, we take the data room, they upload it right to us, and we're able to then we can find red flags right away. We can build questions to ask the founders right away for them. We can also build their memos for them. And soon coming out, we'll also have workflow. So you can just put the data room right away and, put in how you do because every, VC and family office has different thesis, right? How they do their investment differently. They want to build a risk score first, and then they want to do memo after, and then they want to do different things such as these, look at the market, and then they want to see questions. Then they could get this all emailed to them, or they can even send an email to the founder with this.
Interesting. Now, data rooms, first of all, some founders, from my experience, don't even know what that is. They've never heard of it. But even the ones who know what it is and have created ones, my understanding is that they do get really messy. They get really bad. They're often not set up in an optimal way that investors like. What are you seeing in terms of the way data rooms are set up? How bad is it?
Depends on the company. Some companies have stronger financial backgrounds. Some of them have stronger technical backgrounds. I would say the smaller the company, so if it's a pre-seed or seed, the worse the data room is going to be. It has been looked at someone from CFA who has a CFA or who has a financial background. That is going to be all over the place. You'll look at it, you can read it for 3 days and you still won't know their revenue for the year. You can look at it, it's very complicated. It's very complex when it's that unstructured. So that's what we're trying to take it away. We're trying to make you, like I said, private markets as easily as investable as public markets.
So yeah, a lot of these teams are often overloaded. And when they are, they might have to cut corners, take some shortcuts, leave some stuff out. So what, from your experience, gets often missed when the team is overloaded? Where do they drop the ball usually?
On the VC side or on the founder side? Or on both?
On the founder side.
On the founder side, their financials usually aren't up to date, and their forecasting isn't up to date. Their forecasting especially is not up to date. They're not aware of the movement in the market. They're not aware of their competitors in the market. They're maybe have a too pessimistic or optimistic TAM or SAM or et cetera. These numbers just aren't up to date. What their go-to-market strategy isn't up to date at all. They're not seeing what's actually catching the customers, or they're not at least explaining what's catching their customers to the VC. So the VC doesn't actually know if they have a strong go-to-market, or how big the market is, or what the competitors are. We're seeing a lot of financials, I find, are missed the most. The product is usually well explained, well kind of demoed, whether it's in a sales deck that they're giving to the investors in the data room, or whether it's a pitch deck or any of these decks. The product, I find, is usually explained very well what their mode is, things such as these. However, the financial side, the go-to-market side, the competition, the kind of new reality we live in with AI, what's all these new companies coming up, they're years behind sometimes.
Okay. And you know what? Actually, how about from the investor side?
Investor side, it's just too unstructured. I think how every data room is built different. So from the investor side, I think they're looking at it like they're looking at one data room, then another data room, another data room. And it's like reading two different languages almost, because everything is everywhere. Basically, you're not having it putting it in neatly spaces. Like this is the financials. This is the market size. This is what our product is. It's all together. You'll have financials mixed with what the product is, which doesn't make any sense. So basically the VCs going in, they're having to break up the data room themselves and move it, move things into certain categories on their own. What's the executive summary? What's the business plan? Sometimes they have to draft their own business plan within the memo for the company. What's the financials and the revenue of this company? What's the forecast in this company? Whether they're running, every family office or VC is going to run different types of forecasting, but they might not have those numbers to run that forecasting. So they're seeing just completely, it's a complete mess on the financial side, usually for VCs.
So on the investor side, on the VC or family office side, when due diligence does go bad and it shows up 6 months later, what are the most common things that go wrong after the deal closes due to bad due diligence?
The runway gets cut. We see the founder's going to run out of money and they're going to have to come back to the investor and ask for more money. That's a serious problem when due diligence isn't done right. I'd say runway definitely. I'd say market competition as well. They didn't see that there's another player that maybe was just invited into YC with very similar ideas and has a lot of backing behind them and is going to the market. So they could lose a lot of market share. I'd say those are probably two of the main ones, especially on the runway side. Going back to an investor and asking for more money, it's not a good look on the investor side when an analyst has to come or a VP has to go to their GP and say they need more money or we lose our entire investment. So I'd say that's probably number one. I'd say probably competition and what's going into the market and the reality of the product is probably number two.
Okay, interesting. Um, just want to jump into AI a bit because you worked now for a few AI companies, a few AI projects, even before ChatGPT came out back in 2022. So in finance, AI is getting adopted from what I've seen pretty effectively. But every AI product in finance, their main value prop is speed and efficiency and cutting the cost of doing this work. But what can AI do that three very good senior analysts with enough time and budget just couldn't do?
They can look over the file a lot faster and they can find red flags a lot faster. They can break down time. So really it's about time for my company, at least. We can go on OpenAI and ChatGPT. Sorry, we can go on the Claude, Anthropic, Grok, all these other ones later, or some of the new financial tools being adopted as well. We can talk about that later. But on my financial team, it's about finding the red flags and finding the competitors in the market and finding the finances, seeing and the patents as well, seeing if they're actually truthful, things such as these, seeing what the market size is. Sometimes they oversize the market by a lot, seeing if that's truthful as well, and seeing if maybe why is there like 4 months missing from 2024? What happened there? Why did revenue go to zero for some reason there? I think finding red flags is probably its greatest strength right now, at least for us, finding the red flags and also automating the workflow, which is coming out with us soon as well. I think that's going to be very important. And when we talk about workflow, we can move more towards GPT and Claude as well in that conversation.
So it sounds like your value prop is like most AI products in finance is also speed and efficiency. But besides speed and efficiency, is there something that they can do with AI that they wouldn't be able to do without AI? Something that would be just not possible without AI?
That's a good question. I'd say AI cloning is very helpful. It's almost like cloning another person. When we have a kind of a cloning mechanism ourselves, it's not nearly as good as some of these others that I've seen, especially there's one coming out of KPMG that I saw was pretty good. So I'd say AI cloning, cloning how a person works and how a person builds templates, how they do their due diligence is can be very important. I'm sure you know the whole open claw, what's going on over there as well. That's about speed and diligence as well, I think, at least. But I think cloning a person's task and what they're doing and reliability. Also, potentially more on the public market side, potentially find arbitrage in the market. They might be able to, because they're able to look at so much numbers so fast, they're able to find arbitrage so much more faster than a human. I know that's going back to the time, but if you don't have any time, you're not going to find this arbitrage, right?
Sure. Interesting. So I mentioned you were in AI back before AI was the hot new thing at a company called Outlier AI, and there you were writing finance questions that the best models in the world at the time would get wrong. And my understanding is you were grading their answers, I'm curious, what did AI keep failing at when it came to finance back in 2022? I just want to get an understanding of how far the models have come.
So I worked in data, and then I also went to Outlier is completely different now. Well, it's not. It's changed a little bit since I was there. It's more become a marketplace. But I was seeing a lot of hallucinations back then. I was seeing questions that literally just made no sense back then. Now I'm seeing a lot less hallucinations. I'm seeing things like perplexity that almost guarantee close to zero hallucinations. So I'd say hallucinations is definitely one that's big. It would almost sometimes just talk just to talk when I had no idea what the answer was. I'm seeing stronger RAG models, things such as these. So I think the reliability on AI is becoming a lot stronger. Being able to ask it questions and getting an actual answer that's right, doesn't need to be, certified and background as much, I think is becoming more of a reality now.
Okay, interesting. And also at Outlier, obviously you were paid to have better judgment than the AI when it comes to this stuff. But now that you're building the thing that is supposed to replace that judgment, when did you go from being the person correcting the AI to the person building the thing that gets corrected?
So I think, sorry, you're saying when did I start correcting AI until when I'm now being corrected by AI?
Yes, exactly.
I'd say maybe about a year ago, I saw ChatGPT 5 was kind of a disappointment to me, but I think ChatGPT 4 and plus, I saw a massive difference between 3.5 and 4. I saw being able to add more data to ChatGPT. And there's more models. I know everybody loves OpenAI, but I use a lot more models than just OpenAI. But being able to add a lot more data into ChatGPT and seeing the different outcomes that it's had compared to, let's say, 2025. I know it's 2026 now, but 2025 compared to 2023 or 2022, it's quite astonishing to see the differences now. You can add a lot more data and you can get a lot more accurate answer. For example, I used to write R code. It would give me terrible, terrible R code back. So I used to run regressions on R code, just even simple regressions. Let's just say like a Monte Carlo regression or something like that, something simple. And it would give me terrible code. It would all over the place because I would give it some data. I'd say, run this. It would run it on Python. And then I'd kind of take what was on Python and move it to R. I know I have to change languages and stuff, but anyways, let's stick to Python for now. It would give me a regression that was terrible and it would break a lot. And this was literally just a script. This wasn't really a hard code to write. Now I find with data and the integration within, let's say, let's focus on OpenAI, I find past ChatGPT like 4.5 and going forward, it's become a lot more reliable, 100%.
Thing. And so basically at Outlier, I think what you were doing is comparing two AI outputs and deciding which one was better. Is that right?
It was multiple AI outputs, yeah. So there'd be
Multiple AI.
multiple
Okay.
outputs, and then I'd have to pick one. I'd almost have to explain why is this correct.
Gotcha. And is that still what you're doing at Acephalt?
Not as much. I'm not on as much on the technical team now. I'm more on the
Okay.
financial side. I've
Okay.
helped build, some of the ideas, but I don't build in the backgrounds. Our engineers are a lot more better than I am at building the background and building the products than I could ever be. So I'm more happy to, give out ideas, supply ideas, and have them build it and test it and see where things might be going wrong and just try to give suggestions.
Interesting. But you were inside the training world or the AI model training world for a while, whereas most people don't see the training process for an AI. Most people are just building on top of AI and or working from the outside. They'll use an API and judge what comes back, but you were involved in the training. Um, did that give you any insight as to how the models reason about finance that founders building on top of them aren't don't know about?
It gave me some reason back then of where I might see a gap in the market. Recently, the models have changed so much, especially with Quad. I see Quad as a real outlier right now in finance. But I think back then there was more of definitely a gap. I saw it was almost just saying stuff to say stuff. And when I say that, it's just saying garbage. So I'd have to correct it. Now I see the model is a lot smarter. Even when it makes mistakes, it would get like, let's say 9 of 100. And the 1% that I got wrong was kind of close. It could be debatable whether it's right or not. And look, there's definitely still problems with AI, especially when you're when you put in very large data sets, there's still a lot of problems with AI, and I see them daily. And I see it also with prompt engineering. I see a lot of problems with the way you talk to AI yourself and the way you prompt AI. You're going to get two completely different outcomes. If you're telling it to do a million things at once and it gets, overheated and it gets kind of over frustrated, it's going to give you a lot worse answer than if you're kind of more efficient with your prompting.
Just shifting gears a bit. So you took a financial markets course at Yale, and it was
Kid,
taught
yeah, that
by
was a very long time ago, but yeah.
a Nobel Prize winner. Yeah.
Yeah, that was almost 5 years ago now, but yeah, that was during COVID. I took a financial course at Yale.
So one of the things that he won the Nobel Prize for, and one of his arguments was that markets are driven primarily by psychology and narrative as much as fundamentals. But it's interesting because you're now building a tool that's supposed to strip away the narrative and give them pure fundamentals. So that's what it's supposed to do. But do you actually believe that's possible, or is the narrative always going to be part of the investor decision?
S- So there's going to be narrative in in an investor decision. We've already seen that when we've gone to VCs and they're looking at, there can be certain topics such as ESG. They're looking only to invest in ESG. They're looking only to invest in AI. And they might even pick up a couple, wrapper AI companies that are terrible because they just want to invest in AI. Or you can even just see it on the market itself, the public market. You see there's so much narrative around AI. It's almost like they're comparing it to the dot-com bubble. I don't agree with that, but you're seeing evaluations maybe where they shouldn't be. And there is some correction right now going on already with companies like Oracle, some furthermore companies, even Microsoft, seeing quite a bit of correction. So I think at the end of the day, it's always going to come down to numbers at the beginning, pre-seed, seed. You're going to see a lot of companies that are driven by narrative, psychology, or sometimes even emotion. But Series A and plus, we see, which is the companies we work with that are investing in Series A plus, we see it come down to a lot more numbers. That's why we don't work a lot with pre-seed companies, because we see it come down more to emotion sometimes than ration, and whether they should invest in the company, or maybe not even emotion, maybe just the founder or what they're building in. Then it comes down to just, rational investing that we see maybe from Series A to Series C investors.
Now, just that sort of founder to founder, as you know, I've also
Yeah,
founded
yeah.
an AI startup. So besides doing the Attainment podcast and running the Attainment consultancy, that's my main focus right now, is building that AI startup. So I'm curious to pick your brain on your journey and your world as a founder. So, for example, you used to work in two accelerators at the same time while running your previous company. What was that like? And they were far apart, yeah?
Yeah, so one was Tree Frog and one was the eHub or Startup Garage from the University of Ottawa. So definitely recommend for first time founders. There's a lot of things you go into the market, not understanding a lot of government grants, especially. Government grants can be key at the very beginning, especially while hiring people. Government grants are especially key. So I definitely recommend going into some of these accelerators. I think maybe there might be some overkill. Maybe I've been in too many accelerators now. We're in Next as well. We're very grateful to be in Next too. But for first time founders, 100%, I think it's a good place, even to network as well. You meet some people that have been very successful within the startup world. You network, you get to meet those people. You get stuck on something. Maybe you're not sure why your revenue's suddenly collapsing. Maybe you're not sure why your budget looks terrible. You can go out and ask that person, because I found, sometimes people are almost willing to take a call with somebody, especially if you know them, just for advice. People are very friendly to giving advice. Giving money is a different thing, not as friendly, but advice, I think, is something people are very friendly to. So I think even just for the networking aspect and just learning about all these different things that I actually didn't know about before going into the accelerators or incubators, I definitely would recommend it.
Fantastic. Yeah, I'm looking to get set up with a few right now because I think we're ready for it. But
Yeah. There's some
one of
excellent
your
ones in America as well. I know I've only done the ones in Canada here, but one thing, if I could go back in time, I would even look at the ones in America more too, because there's some excellent ones in America.
are Canadians able to get into the ones in America, or
Yep.
do they have a residency requirement?
Nope. So Canadians are allowed to get into the ones in America. Most of the ones in America except global. I know there's been some talks about YC, how they cut off Canadians for 2 minutes there, but then they changed their mind and allowed them back in. So the majority of them, they do allow global, anybody from any country.
Oh, fantastic. That's
Yeah.
great to hear. That's music to
Yeah.
my ears because now I could connect with some of them.
Yeah. 100%.
And I actually want to move to the US, so that could work out nicely. Thanks for the tip. Now, one of your previous companies did a pitch at the U Ottawa Rally Day, a startup pitch. Which company was that?
Well, my current company pitched at the U Ottawa Rally Day in 2025. And
Oh, it was
then,
Acephalt.
yeah, we
Okay.
also just pitched at the IEIC. We go to quite a few pitch competitions, but yeah, that's one of the ones we did pitch at.
What was the other pitch competition? And what usually happens at these pitch competitions and what do you get out of them?
The one we went to recently was for kind of a global competition to see the finals was in China. So we were kind of trying to get a ticket to China to go there. What we see is usually very similar people to us and situations to us. They're between pre-seed and seed. They're trying to grow their company as well. They're right now, I feel like a lot of people are moving away from software. So maybe there's less companies kind of like us, but a lot of companies maybe in the same financial situation as us, where they're trying to spike their revenue to look a lot nicer and more attractive to investors, things such as these. So I see a lot of similarities between companies. Standouts is usually always traction. When I see at these pitch competitions, I see the company with the most traction seems to usually win these competitions, or it doesn't have to be traction. It could even be traction of the person. So the person went to Yale or went to one of these large schools or is a doctor or built a successful business before. So traction in kind of any way, I find is starting to win a lot of these competitions.
And your co-founder, Winnocent, he just won a CCFA Innovation Award, which I believe is affiliated with Blackstone, JP Morgan, TD, Franklin Templeton. And I believe they were in the room during that award. And as you said earlier, you guys got into Next 36. So since getting that recognition, what has changed in the way you're dealing with clients or customers?
I say environment, clients, sometimes it's difficult to say exactly if that helped. I think getting to the Next potentially helped, getting that logo, seeing a little more validation. I think there still needs to be more validation. There can always be more validation to get reputation within the market. But I think, my co-founder made a joke about like it's collecting, all the different Pokemon, all the different logos that you can put on your sales pitch and talk about that you've been through when you're going to sell. So I think it definitely helps the reputation, but I think there's always more to get, especially when within the American market.
Interesting. And so I've heard of Next. They actually have an AI program that I'm looking into, but
Yeah.
you specifically got into Next 36. What's Next 36?
There's an AI program in Next, and then there's just like their regular incubator, 36, which they take on 36 companies. But the AI incubator, we've been to the pitch competition for that. So that's like the finals. Very cool as well. That's more just surrounding, just AI, exactly almost what it says, artificial intelligence and the advancement of artificial intelligence. Compared to Next 36 could be more surrounding something like hardware or product, doesn't have to be AI or software, which I find, software is seen a little more gloomy recently on the markets.
Yeah, yeah. You see the stock price crashes ever since Claude Code started to make waves. It's just been downhill for software companies.
It's been the grim reaper has came to some software companies, Salesforce, Monday.com. Even though their revenue is good, people don't have, like you said, psychology earlier before, people don't have that, they can't see 5 years ahead of that company still having the same revenue projections because they're not the same as Claude Code and they're not as like a chatbot as automated maybe as Claude Code. Or maybe their UI or the way they get the end product takes too long now with some of those software companies.
Yeah, I know a few software companies where beating earnings. So ever since Claude came out, they're beating earnings, and part of it is actually they're using AI to increase their profit margins. So they're beating earnings, their projections are looking great, but their stock price, because of this Claude Code situation, keeps going down.
Yeah. Yeah, exactly. Quad code. We'll see what the outcome is. I really like Quad code. I love using it. I think it's very helpful. But every meeting now you go to, it's how are you different than OpenAI, Quad code? It's like you got to really differentiate yourself in the market away from those two or big OpenAI models like those two, because everybody is looking at Quad now, and that's like the industry standard with their reputation.
Well, how do you do that if you are the founder of a B2B enterprise software company? How do you differentiate yourself against the likes of Cloud Code?
It's extremely hard, but I'm always going to every meeting assuming that they're going to ask that question, and you need to come up with an answer to that question with some type of moat. So there's certain things that Claude isn't doing. There's certain things that they might not want to touch, that they could be niches, that maybe it's not worth to go into that industry. I would suggest sticking to your niche, at least for the time being, until you can scale, and then you scale when you get that money and you conquer that niche. But I would consider staying as niche as possible, and assuming that every time you go into a meeting, you're going to be asked, how are you different than Quad? But if you're in the right niche, it's small enough that Cloud Code doesn't, or Anthropic doesn't really see any necessary reason to go in and take it. It's just not worth their time. Then you're likely to survive in software.
Thing. And what do you think are the most powerful moats now that AI is threatening software? Besides, besides proprietary data and things like that
For a software company or in general?
for software.
For software, that's a really good question. Actually, the best moat in software right now, I would say, is the revenue traction. But like you said, even that on the public market isn't helping some of these companies. So it's a really hard question to ask. What's the best moat right now for, a ubiquitous amount of software companies? Like, I'm sure Salesforce and Anyway right now are looking at it. And I know one of their conclusions was maybe to even merge just to get some excitement. But finding the right moat, like I said, is sticking to your niche and finding something that Claude doesn't do right now, because Claude can do a lot of things, but it can't do everything.
Gotcha. I think also integrations is a strong mode. So Salesforce, they connect to so many different systems and different applications. So it's kind of hard to rip it out and replace it with AI.
Yeah, definitely integrations as well. Recently, unfortunately, Claude has adapted to integrations. They've connected with Sapir, and now you can kind of use integrations, not to the way that you can with a product like Vanta, or like you said, Salesforce, or some more of these companies, Slack, etc. But I'd say integrations is a good answer as well. Yeah, 100%.
I wrote a blog post about this yesterday, and
Integrations,
that
yeah.
was one of the things that I suggested would be a mode for software companies. Just think a bit more into your background. So, I think originally you were not a finance guy; you were a business law guy. Is that right?
Correct. Yeah. So originally my plan was to become a lawyer. So I did my degree in business law. My sister's a lawyer, actually. So when I was younger, I was trying to follow in her footsteps a little bit, maybe become a lawyer as well. I liked arguing as well. So I figured might as well get paid for it. Right. But then I kind of hit a fumble. I had some health concerns. So I pushed off the LSAT I figured I'll do it next year. I decided to do my master's instead. So after doing my master's, I had a really good supervisor, and he kind of introduced a lot of new things to me, especially surrounding finance, regressions. My dad also worked in finance while growing up. So I kind of already had that background of knowing a lot about finance. Once I kind of fell on to finance, I realized that for now, or my ongoing career is more to be in finance.
Interesting, because most people in this space are, they're finance quants, but perhaps you have, as someone with a business law background, perhaps you have some advantages over them. So, especially with, I would assume with, legal documents like a compliance notice or legal clause. Curious, what would someone with a business law background see that a quant wouldn't see during due diligence?
I think legal 100% is important, especially it's not just the product itself. A lot of investors are going to look to legal, even if it's just a pre-seed company. They're going to see certain things, because if you get sued, especially as a small company, that can close the doors sometimes. One lawsuit can close the doors for you. So I think I've seen a lot of things, such as how we do our private policy, how we look at data, how we recommend customers what to do. We can't tell them whether it's a buy or sell. We can't say like, you need to buy this. That's not for us to say. That's for them to make the final decision. So I think having that ability, I think that's helped me a little bit, because I've kind of learned about those rules and how tight Canada is on it, on what advice you can give out to people exactly, especially as we learned, it costs quite a bit of money to become a financial company, to give advice to people on their investments. It's quite expensive, actually. That's probably why we only have, 6 banks in Canada compared to 5,000 in America.
Interesting. Yeah, I recently did another podcast episode a while ago with a gentleman named Avi Lauren Cohen. He's a strategic board advisor, and he was explaining to me as well that when you're in the investment space, especially here in Canada, there's so many legal restrictions you have to keep in mind, and you have to be careful to not violate them.
Dangerous, yeah. It's a little scary, actually, that there's only 6 banks and such an oligopoly. And Canada's ran some of our smaller companies out of the business, but it's good to see that there's some new ones coming up. Some of them with my friends. I've started some startups. I've seen some like Ven coming up, some like Float. We use Float ourselves, not daily, but we have a Float account. And we're happy to see that we're really pushing for Canada to maybe move away from the 6-bank system.
Just going back into AI, a couple of years ago, explainability was a hot topic. It's kind of died down. People aren't really talking about it from what I'm seeing on LinkedIn. But I would imagine that in finance, in due diligence, in the investment world, that explainability still is very critical. Because, an investor has to defend every decision to their partners. So when you provide an AI output to the investors, how do you provide the justification of the output that you provide? So in terms of explainability, do you go over how the model arrived at the conclusions that it did?
Yeah. So before we onboard somebody, we kind of explain to them all the models. We do one-on-one onboarding. So we explain to them all the models within our backend, without trying to be as lengthy as possible. We try to do it as efficiently as possible. Within the final outcome, you're going to see it's quite a long memo, usually 30 pages memo. We can build all different types of memos, but let's just stick to like one of our plain templates on just a financial memo. You're going to see about 30 pages long explaining why we're not going to say yes or no. Obviously, like I previously just said, the numbers behind this company, what are some of the green flags behind this company? That's probably our biggest explainability, is looking at the green flags. And also we risk things as well. There's things that come up as high, medium, low risk, and we show them exactly where those risks are within the data room. You click on that risk and it will go into the data room and look at it. So when you kind of say explainability, referring to maybe what are the risks that there could be if you invest in this. If there are no risks, it's better. And we kind of go across the numbers for them within the financial memo. Like I said, there's team memo. There's tons of different memos that we build for companies within our templates, and they can even clone their own memos if they want to build something that they've built before. So that's kind of our explainability, I would say.
People outside the investment space, what is a memo in the investment context?
So a memo is usually something you build to send out either to your LPs or your other analysts. So let's just say it's just an investment memo. You want to show your LPs that this is a new hot company coming up, maybe we should invest in. You give it a very briefing. You go over kind of the market they're in, the product they have, their revenue, their traction, what they're doing, their vision, basically the executive summary, the founding team. You try to put that into a summary, into one large memo is what kind of it's called. So it's almost like a summary of every topic and every principle that this company has within kind of, one paper.
Okay, so it would be a big deal if AI produced a memo, then the investor handed it over, and if it missed major red flags that they realized 6 months after closing the deal. But it sounds like you guys do some process-oriented things that prevent that, and also some structural things that you guys do as part of your review process. What else do you do to make sure that the memo that the AI hands over doesn't miss something major?
So there's a couple things. So our red flags are usually built by them. They build their own red flags and the criteria. We only work on their database. We don't go out. So they have the ability to use outside data if they want, but they have to decide to do that on their own. And we give them the heads up that deep research, we show them all the research. So first, if they decide to use deep research, they do deep research on this private company. And then it will list kind of, this founder did another company that went bankrupt, blah, blah. And to see if it's right, that will be cited as well within the deep research. And this is if they turn it on. This is now they're doing outbound. If they decide to use that outbound data, then that's more, they're putting the outbound data into the financial memo themselves. If it's just inbound data, then our AI is only looking at the inbound data. We're only looking at the data room itself. So that's it. We're not using anything outside. So there's no hallucinations. There's nothing. Everything you get as well within that memo is cited. Every single statement is cited. You can go back to the appendix, you can click on it, and you'll see exactly where it came from. So there's not going to be any hallucinations that come from outside that data room.
Interesting. And the Ontario Securities Commission.
I love those guys.
Yeah. So late 2024, they put out some new guidance on AI, the use of AI in capital markets. Where do you draw the line between the AI providing support to a decision versus an AI that shapes the decision? So how do you prevent getting into problems with earlier you mentioned primarily your customers are in the US, but for the ones that you have here in Ontario, where do you draw the line? Where do you set the boundary?
So we're not going to tell a customer yes or no. We're going to build them the memo. We're going to build them different memos with all the different risks and red flags. We draw the boundary whether we say yes or no on a company for them. We're not making any decisions for them. We're not telling them that this AI is going to find this company for you on the market without the data room. It's going to pull that data room from AlphaSense or something, and that's going to tell you it's a good investment opportunity. We would never do something like that. What we do is they come to us with the opportunities they found, and then we build the risks that there might be on there. And then we publish the memos for them. They can do deep research in it, and they can do hopefully workflow, which should be out next week on it as well. So we draw the line very strong in the sand as saying, we're not going to tell you yes or no on a company. We're just going to help you do the research on the company.
Gotcha. Interesting. Okay. That's a very clear line to set. Fantastic. You said you have a new feature coming out called Workflow. What's that?
Yeah. So if you ever heard of a company called N8N or Zapier,
I have.
so companies like that are able to basically, so you start with uploading your document, and then you're able to automatically have it do the tasks you previously done. So instead of having to upload the document and run prompts continuously back and forth, now you just upload the data room and it does them all for you and it emails you the result. So really the only thing the user has to do is upload the data room now, nothing else. So that's kind of what we want to differentiate ourselves from things such as Claude and OpenAI, like we talked before. Now all they have to do is upload the data room. The workflow is already built for them. They can build it themselves if they'd like, or it can go off of previous patterns. But after that, all they got to do is upload. Now it's done. No more prompting, no more talking to a chatbot back and forth. And that's it.
Interesting. Yeah, that will just turbocharge efficiency and take away even more manual work when it comes to prompting.
Yeah, we don't want to. We're trying to walk away from chatbots. We know Claude, OpenAI, Grok, many more, Perplexity. They dominate the market in chatbots. We know that we can't compete with them. So we don't want anything really to do with back and forth language.
Interesting. Just curious, for me, from my consultancy side, I'd love to work with a family office or an investment firm. What is it like when you're, you meet a family office for the first time, they're managing hundreds of millions of dollars. What do they think about you? Are they receptive?
Yeah, so there's usually this is very useful. Yeah, we'd love to use this. But sometimes we don't always meet with the GP, right? We meet a lot with the analysts, and the analysts seem to really like it, but they usually have to get GP approval, right? If they want to bring in new technology. We find venture capital can be sometimes a little, I don't want to say stuck in their ways, but they can, they can adapt sometimes a little slower than the public market. So it can be that, it can be a few conversations back and forth with them sometimes to get them to adapt and learn the technology. And we're trying to make the UI and UX as simple as possible for them. As we know, we don't want a long, lengthy onboarding process.
Interesting. Yeah, onboarding is just one of those things that you got to get right. You got to make it as quick and seamless as possible for you to get that adoption.
Exactly. Yeah. Because they use the product once and they have one bad outcome the first time they use it. It's not likely that they're going to stick.
Right. And that's where in the software world, where a lot of the headaches come from during onboarding. I mean, that's why they have, many software companies have customer success teams to make sure that the onboarding goes smoothly. So I found it interesting that so you guys meet primarily first with the analysts. That's interesting because I would imagine the analysts are a little bit more receptive to AI. They're, younger, more tech savvy. Is that the case?
So I'd say it's just kind of how it goes when we do either our go to market. It's hard to get a GP to sit in a room with us sometimes. They're very busy. They're maybe not on LinkedIn as much or not on checking their emails or like things such as these as much. So we have talked to GPs before, but I'd say we usually talk to the analysts most of the time. I'd say 70% of the time. They can be tech savvy, but sometimes they can't just go and use a new tool and put data rooms into it, right? They have to get it approved by a GP. Usually that's the case, but they're usually very, embracive when they see this technology because they know it's going to save them time and they know they're going to be able to now talk to more founders and potentially find more better deals.
And again, for you guys to close those deals in this industry, there's a high level of trust involved. And you guys are a young AI startup. Every AI startup is young because, AI has only taken off for the past few years. So as a young AI startup, how do you build that trust and get them to take a risk on you instead of waiting for your AI startup to be a little bit older next year or the year after?
So building trust right away, I think, is finding out what the customer pain point is right away before we even show them the product. Sometimes we walk into the wrong meetings, right? And there's not even a customer pain point there. So we'll still show them the products and maybe ask for referrals, but we understand that there's not going to be strong synergy between us and the customer there. So the first thing we usually do on sales calls or the people we're scoring out is to ensure that they are our customer and they are our ICP. And then we also want to find out what they do at their day-to-day as well, see how they're working and kind of explain to them exactly where our technology comes in that day-to-day when they're looking over their different data rooms, looking over these wide array of things where our technology can help them and showing them a live demo and showing them exactly bottlenecks and pain points that they're having and how we fix them.
It's good advice for any software sales team. So Winnison, your co-founder, is the CEO, and he has the kind of public profile. He has that award, for example. So I would imagine the Acephalt story often gets told through him. But I find that when it comes to co-founders, the co-founder dynamic, it's the best co-founders are usually where one of them can do something or build something that the other can. Would you agree with that? And if so, would you mind sharing what the two of you, what you can do that the other one can't?
So there's a couple things. There's a technical aspect. We're both technical in different ways. There's another aspect as in Winnison's excellent at networking. He has a massive network, like you just said. I think that's why what he can do that maybe I might be lacking. And maybe he's even taught me things, how to network better and stuff. As in on the other side, I think in the financial side and taking care of the budget, making sure that we have enough runway and continue to survive as well as I'm finding new customers. That's more on my plate and just ensuring that, the runway is going to be successful for the next 6 months. I think that's everything of that is on me.
Gotcha. Interesting. Fantastic. But, you're in an interesting spot. You're the CFO of a company that's automating the work of financial analyst. And right now, there's a lot of talk about the job market disruption from AI. The CEO of Anthropic, I believe, said that 50% of white-collar jobs could be gone within 1 to 5 years. That's a wide range, but as early as 1 year and within 5 years. Now, luckily, you are a co-founder, so you are kind of protected from being replaced by an AI because AI can't replace an entrepreneur, right? Because it doesn't have agency. It doesn't have agency, but it can legally own something. So just curious your thoughts on that. I would imagine you're not. Would you agree with that thinking?
In regards to that an entrepreneur can't be replaced by AI, or is in regards to the white collar market is being collapsed, or both?
So, would you agree that, do you feel as an entrepreneur yourself do you feel quite confident that AI wouldn't be replacing you anytime for a while?
So 2 things. I think AI is not going to replace me. I think it's going to help me actually as an entrepreneur. It's going to help me get things done a lot quicker. I already know that if this startup was 5 years ago, we wouldn't be able to get product to market as fast as we can and be able to make the updates we did as fast as we can. I'm not even an engineer, and I clearly know that. I think everybody clearly knows that. Moving with AI and adopting AI as fast as everybody can is extremely helpful. And I think it's helping entrepreneurs. I think we're seeing more entrepreneurs, which I think is a good thing. It's definitely widening the market for small businesses now. And I think that's an excellent thing. On to what Anthropic said, these CEOs, I saw, but no, it wasn't Sam, it was Elon Musk, I think. It was either Sam Altman or Elon Musk said this maybe a couple of years ago, white collar jobs, we are going to be replaced. They keep saying this for the last 5 years that, AI is going to replace these white collar jobs, which might be true. There might be less software engineers going into the future, but a good software engineer is never going to be replaced, in my opinion. AI is the software engineers we code with AI, we code with Cursor, and we code with Claude as well, but there's so many bugs still, and it still needs that final touch of our idea and what we're doing. And we still need a software engineer to implement that because this code is not easy to read. It's quite complicated. So I think software engineers are always going to be around. If there's going to be as much of them going to the future, that's another, I don't know about that. But I don't think they're all going to be wiped out. They've been saying that for last few years now, longer.
I'd like to say that my thought is that it's sort of a PR type of tactic. It gets attention. The doomer sentiment gets attention. It makes the headlines, right? And it gets them attention.
Yeah, it's like Meta. I remember Mark Zuckerberg, saying something crazy like that as well. And our product's so good, it's going to replace all of this, right? And like you said, it's doomer. The media is going to pick it up right away. People are going to think, wow, Meta is that good. It can actually replace this person. It's going to save us money, but in the long run, it at least right now, it can't.
Fantastic. And just looking ahead 5 years from now, let's say Acephalt becomes standard infrastructure for investors, for family offices. Obviously, you would love to see that happen. That's your long-term goal. But if that happens, besides jobs, what disappears from the relationship between the investor and the companies they're backing? What gets removed?
Our goal really is to have investors look at a lot more companies. We feel that the market is broadening more. It's getting bigger now, like I said previously with AI. And we want investors now to have as much access to the public market as they do to the private market as they do to the public market. So we think there's not going to be a big change between the investor and VC relationship. Maybe it might be quicker. That's, in my opinion, is a good thing. If you get a no quicker, it's even a better thing because we've raised money. We've been through these long processes of sometimes it takes 3-4 months, and sometimes companies don't have 3-4 months to raise money. Sometimes they need that no so they can go to another VC and pitch. So our plan is to have VCs look at a lot more companies and really have investors talk to a lot more companies or a lot more VCs.
Oh, that's interesting. As a startup founder, that is fantastic. Getting faster decisions from investors, even if it's a no, getting faster decisions, that makes a big difference.
100%. Yeah, no, like I said, we felt it ourselves. We don't want to sit on this maybe. It's just, it feels demoralizing to the team. So I think just a yes or no quicker is a lot faster, and teams can move even faster if they have that yes or no as well.
That's great. That's great for the startups out there. Just touch back on the job disruption, future work topic. So, you guys are automating a lot of the manual grind that a junior analyst would do. So that manual grind is getting done by AI. So if AI is doing the manual grind, then my guess is that investment firms still need junior analysts, like you said, as it is with software engineers. You need someone who oversees everything closely. But what would be your advice for the next generation of potential analysts, and what skills they should be building, considering that a lot of the manual grind, creating a master spreadsheet, for example, that considering that stuff, it gets pushed to the side?
I'd say don't be conservative with the technology you use. If you're saying in Excel, still trying to build, formulas using VBA. I used to use VBA myself. It feels like it's from 1990. If you're still doing that, you're going to get probably left behind. You need to use new technology, new AIs to keep up with, to be the best in your field, really, and to get chosen. Are there going to be less junior analyst positions? Potentially. Are they going to be moved into other sectors? Most likely, yes. We're hoping those jobs are going to be moved into other sectors, and I can see them being moved in other sectors as well, especially, whether it's in agri-tech as well, these new sectors that need environmental analysts and environmental financial analysts as well. I see that in Canada as well, especially within the Ring of Fire right now. But yeah, I would say don't be conservative. Don't just sit on Excel. And just because it's your usual routine doesn't mean it's a good routine. Be open to using new technology like Claude. And Claude's just the bottom of the spectrum. There's so much more above that.
That's good advice. And that's what you're doing. You're embracing the technology in your job as CFO. But so you touched on this earlier, that, investors, one of the things they'll be able to do with all the time they get back from AI assisting with the due diligence process is just look at more deals, right? Higher volume. Is there anything else that opens up for them besides the higher volume? Any other benefits?
Making better deals, I think, would definitely finding the best companies that would be definitely having higher returns. I think if they use our technology, getting the best deals. I think time, efficiency, obviously, and getting better deals are the two biggest benefits of using technology such as ours. Just because you're weeding out a lot of the ones that you may have taken, you're finding new red flags and things such as these. You can do this a lot faster now. So I think just finding better deals. I think that's probably the most important part, actually.
Gotcha. Interesting. So it's both. So it's going through higher volume of companies and making higher quality decisions on each one. And the net effect of that is that you invest in a lot more of the right companies.
Yeah.
Super. So, sorry. To close things out, Nicolas, this has been a very interesting conversation, but you are basically one of the guys to talk to when it comes to AI and due diligence. So for our audience, if anybody wants to learn about how AI relates to due diligence, they should definitely connect with you. But what's one thing most people get wrong about AI and due diligence?
I think most people think it's as simple as just throwing your data into ChatGPT and asking for an answer. You're going to find there's still hallucinations within ChatGPT, although I did say it did get better. These data rooms are very heavy. When you put them into an LLM like that, you're going to get a lot of wrong information. And the thing with ChatGPT is it doesn't care if it gives you wrong information as long as it gives you an answer. With us, you have the option now to just look at the database itself and we'll give you an answer. We're not looking at anything outbound. If you want to look at outbound, we also give you that opportunity as well. So we're quite different from ChatGPT that way, as in we also cite everything right into the data room as well. So I'd say doing something lazy, such as just throwing it into ChatGPT and asking a question, isn't good enough.
Gotcha. And finally, what does the next 12 months, do you think, look like for you and AI and due diligence and your company, Acephalt?
Us as a company, I think more growth within the American market, hopefully within the Canadian market as well. Moving to the company again, we started in Ottawa. Now we're in Toronto, moving the company again, hopefully to America, looking at markets within San Francisco and with New York. I think that's our main goal. And continuing to build out the product, building a better user experience is obviously our number one goal as well. And then within due diligence, the market is going to be ever changing. I think there's going to be maybe a move away from just the market itself, more software companies. I think we could see more companies come out within hardware, could see patents maybe make a comeback, especially within hardware, especially within agri-tech, as certain things I'm seeing right now. I see those coming more into due diligence as well. IP license, things such as these. These are probably two things that I probably see the most coming into due diligence, but I think it's an exciting time right now, especially the way things are changing. I think right now they're, hopefully changing for the best, hopefully.
And do you think for the Canadian startup and investor scene, do you think it sounds like this is something that could really help the Canadian investors, be a bit less conservative, make decisions more confidently, and that would be really beneficial to the Canadian startup scene. It was Murray who introduced the two of us and recommended to have you on. And he's a big proponent of, we got to build up Canada as a country.
Yeah, I love that too. Yeah. Yeah, no,
Fantastic.
100%. Yeah. No, I agree. Born and raised here, it's a brilliant opportunity to be here. I think, like you previously noted, there needs to be less conservatism. There needs to be more focus on the private market, especially within technology. I think Canada's fallen rapidly behind in technology compared to America and China and Singapore, places around the world. So I think it's time now for Canada maybe to do some more investments within Canadian companies. And I kind of put this on CVCs as well. Deloitte CVC, Shopify CVC, different CVCs such as these. I see them only investing in American companies. It would be nice to see them invest in a Canadian company, considering they are Canadian, or their office is in Canada. Obviously, Shopify is Canadian, but I remember going through, Shopify's CVC list. There was like one Canadian company, like the 15. It was a little disappointing. So I think Canadian companies investing in Canada is going to be very important. And I think investing in technology for Canada is going to be very important within the next couple of years.
Fantastic. Nicolas, thanks for this. This is a very interesting conversation and shedding light on an area of the startup world, investor world that is transforming. For anyone listening who wants to follow what Nicolas and Acephalt is building, you can check them out on acephalt.com, where you can request beta access. Is that right?
That's correct. Yeah, we have users using our beta.
Fantastic. Also, Nicolas is on LinkedIn as Nicolas Frendo. I'll include the links in the show notes and the description. If this episode was worth your time, please share it with one person who you think should hear it, whether it's a founder, an investor, or anyone else, or someone interested in how AI is shaping the world. That's how the show grows. I'm David Cyrus. This is the Attainment Podcast. Thanks again, Nicolas. See you next time.
Thanks so much, David.
Pleasure.